very well from pre-COVID levels. It's done phenomenally well. Pashupati Advani of Global Foray is now joining us to take some questions on what he's making of things. Pashupati, good to have you with us here. Thank you very much.
Likewise.
I mean, you know, the market took a bit of a break in March and then it just took off. April was super, 9-10%, and it gets us very close to all-time highs. But do you think there is enough in the mix, enough in the tank for sustained, meaningful gains from here? What's your sense?
You know, I'll tell you, I think India is performing and doing well. But the thing is, there are, according to me, tremors in the West, particularly in the banking industry, which I think we are not going to be able to escape, because at the end of it all, you know, money flows where the water flows, and it's kind of like that. And there are tremors in the US. I mean, there's some scary numbers coming out. They're saying a lot of mid-cap banks in the US are going to go under. I also asked the question that, you know, the same issue that has affected mid-cap banks in the US, which is this mismatch of investment versus deposit. We've also had our rates go up. So I don't know how our banks have actually been able to manage it. I think that's the, it'll be interesting to see how that looks in time to come. It's not going to show up immediately, but it'll show up in time to come. Prashant?
So that's the key reason why you're not very fond of banks out here in India, because you think there is going to be a mismatch?
No, I think that, and also that is one issue. And the other issue is, I think that most of the banks have given money to fintech companies who have been extremely liberal in giving loans. And I think that some of those loans, as people get, you know, lose their jobs and things, will probably, you know, just not come back, and they have to be actually written off. And the question is, very few NBFCs and banks have got the balance sheets to be able to just actually bite the bullet and still show good results. So, you know, that's my take on it. I'm maybe a slight contrarian, certainly in the banking industry, but it is something that I believed in for a while, and I've been wrong, because the banks have continued to power themselves upwards, which is wonderful.
Pashupati, hi, good afternoon. Surabhi here. Good to be chatting with you after a while. Since we're on the subject of financials, I wonder if you've had any interest at all at any given point in time in Paytm. This quarter, at least, you know, it's very clear that they've put their head down and they've focused on profits. Losses are reducing. The EBITDA line is looking better. Any thoughts on this?
Yeah, well, I actually hold some, so you know that's okay. That's always good. But you know, we've been talking about the four sort of big sort of new wave stocks, so which Paytm, Policybazaar, Nykaa, and Zomato, that came to the market kind of at the same time, and they all got kicked pretty hard. I think Paytm has got kicked and has now come up. I think the lows were in the low 500s. But they're still all way below their IPO prices, and therefore you've got a lot of retail and institutional investors who are upset, and particularly the ones who have taken the you know, pre-IPO pricing and kept it and had locked in. So you know, but out of those four, I would say that Paytm is the best and definitely worth nibbling into, simply because I think it's a business model that's sustainable. And, you know, they have the technology, they have the business model, and they're out there punching. So it's just, I think that's the reason to own it.
I guess it's all about the price. Now, I don't know if you'd want to talk about your price of acquisition, but I'll frame the question differently, Pashupati. If someone's buying now, can they ever hope to get to IPO levels, or was that just sort of out of whack? What's fair value looking at the current metrics on Paytm?
No, I think that, you know, when the IPO seems like a dream right now, because I think at or close to the IPO level, you'll have a lot of institutions also selling off. But I think that, you know, it has been sufficiently kicked to be able to come, you know, do quite well. It's kind of jumped up from like the mid 600s to just over 700 in the last 2-3 days. So I personally tend to just wait for a little bit of a pullback before going in again. But I am actually thinking of increasing my position if it does come off a little bit, you know, and like, you know, maybe 5% or so in the back into the 600s.
All right. Hi, Mr. Advani. Good afternoon. Nigel on this side. You know, you were nibbling earlier, a couple of interviews earlier as well. You were nibbling into Paytm. I thought by now you would have taken a big bite. But anyways, we'll take that. If it corrects 5%, then maybe you'll be, you know, back on the nibbling list. But you also told us, you know, a while back that you like mid-cap cement. Now that's going to be quite an interesting space, and I'll tell you what, I have my ear to the ground. After a while, there is some possibility that maybe there could be one such deal that gets closed out, maybe not in the next 3 months, but maybe the next 6 months or so. What do you like from Midcap to cement? Because there are a couple of tailwinds. One is consolidation, which may or may not play out, but input costs have reduced, and in an election year, we'll see volumes picking up. So your view on that?
So I agree. I mean, I do like the cement sector. I like mid-cap cement because it's cheaper than large-cap cement. And obviously, as you mentioned, consolidation is one of the buzzwords that is long overdue, according to me, because the large-cap cements are trading at much higher valuation than mid-cap cements. So it's just a matter of time. I think that, as you said, they are going to have demand going up. The input costs are going down, and it is election year 23-24. So, it's going to be good. And the government is certainly planning to finish a lot of their projects, and that's all going to need cement. So that's another thing that, I think that that's why it's high on my list. It hasn't done, some of the stocks have not done too well, but, I think maybe this year is cement's year.
Pashupati, we'll leave the conversation here for now. Thank you very much for joining in. Need to get into a break. As we do that, listen in to excerpts from